So ADA has finally tapped into this range that I've been looking at for the past few weeks. And this target is the fifth wave target, where I've been tracking a 5-wave structure to the upside. And since then, we have seen a structure move to the downside play out, where we've seen a drop of just under 14%. And so it's possible that we ended up completing this fifth wave, and then we could see a bigger retracement to the downside that I've been talking about for quite some time. But alternatively, it is still possible that we are still within this fifth wave, given that I've been tracking a 5-wave structure. And so, as you guys know, I've been looking at for this move here to be the wave 1, and for this to be the wave 2. And at the bare minimum, this wave 3 had to reach the red line, which is the 1.618 level, which we ended up exceeding. And so this big move to the upside could potentially be the wave 3. And then we have this quick to move to the downside to form wave 4. And then we see a final push to the upside to complete that fifth wave. But for this structure to play out, what we need is for ADA to not breach this level here, which is the wave 1 or the wave 2 origin. And that level sits at 76.01 cents. And so in Elliott Wave Theory, what you can't have is the wave 4 cross the wave 1 or the wave 2 origin. And so if it does so, then that would then mean that we ended up topping off at this level, and then we see that bigger retracement to the downside. And so what I'll do is I'll check to see what's taken place within this recent move to the downside, just so I know if whether or not we are still bearish, or if we complete this move and then we see a reversal to the upside, where we can then begin to track this wave 5. So if I drop down to the 15-minute chart, in fact, if I drop down to the 5-minute chart instead, and check to see what's taking place over here, and this move actually looks to be corrective rather than impulsive. And then here we have this impulsive move, and here we have this corrective move that played out, and here looks like we're having an impulsive move that's playing out right now. And so what I'm going to be looking at for is for us to have bottomed out at this level, and then we see that reversal to the upside. And here it looks like we had a WXY structure that formed. So if I bring in the Fib tool, and so here we ended up reaching 97.83 cents, and here we ended up reaching 99.7 cents. So if I bring this to over here, so this Y wave would typically reach anywhere between 1 to 1.236, and you can see that we fell short of that region, but we did meet the minimum requirement, which is the 61.8% retrace level at 97.21 cents. And so the WXY structure is still valid despite not tapping into this range here. So essentially this is what ended up forming. And then we had this WXY structure that formed also. And so what I'm looking at for right now is for a bigger WXY structure. So here you can see that we ended up actually breaching past this swing low, which confirmed that we were bearish. And it's possible that this whole move to the downside was actually a lot deeper than the 1.236 level. So very quickly, if I bring in a Fib tool, so here we ended up reaching 97.58 cents. And so typically this Y wave would reach anywhere between 1 to 1.236. But given that we were bearish, we ended up actually exceeding the 1.618 level. So that can happen, of course, in a bearish environment. And so even though we ended up retracing towards the 1.618 level, that doesn't necessarily mean that we are impulsive. All it means really is that we were bearish. And so what I'm still looking at for is a bigger WXY structure that formed, as opposed to a 5-wave move where we would continue to see that deeper move to the downside. So essentially this WXY structure would form the W wave, and then this short corrector move form the X wave, and then this whole move to the downside form the Y wave. And given that we've had this 5-wave structure that's currently forming right now, what we're looking at for is for this move to form the wave 1, and for us to have bottomed out to complete this wave 4 at this level, which is at 87.81 cents. So yeah, I'm looking at for this 5-wave structure to form the wave 1, and if that's the case, then what we could see is a 5-wave structure form within this 5th wave, where we could go slightly higher than the initial price that we ended up hitting. So essentially, I'm looking for this to be the wave 1, 2, 3, 4, and 5. If we end up exceeding this level here, which is the wave X, and so at 97.58 cents, if we end up exceeding that level, then it's possible that we ended up actually bottoming out this double XY structure, and then we can see that reversal to the upside. However, if we fail to breach this level, then it's possible that we see a bigger move to the downside, and rather than this 5-foot structure forming the wave 1, instead it could form the wave W, and then we could see a bigger WXY structure, and then shortly after we'll then see a bigger move to the downside where we then breach past this level here. And so essentially this 5-foot structure could form the wave W, and we can see a correction move to form the wave X, followed by a final push to the upside to complete the wave Y, and then we see a deeper move to the downside where this whole structure would then form a bigger WXY structure, where this move would be the W wave, this move would be the X wave, and then we see a final push to the downside to form the Y wave. And even if we do see a deeper move to the downside, it's still possible that that would then form the wave 4, given that this wave 4 would not be any deeper than the wave 1 at 76.01 cents. And so if I go back to the hourly chart, essentially if we have this WXY structure forms to complete this 4th wave, this 4th wave will still be sitting above the wave 1 or the wave 2 origin, and so this structure will still be valid even if you see a deeper move to the downside. And as far as this wave 4 goes, the wave 4 typically retraces anywhere between 23.6% to 50% of the wave 3. So if I bring in the Fib tool and bring this to here, so we could go as deep as 85.11 cents and still see a reversal. And so this 200 EMA on the hourly chart will be a key level to be keeping an eye on. If I go in the 4-hour chart, you can see that that's more or less where the 50 EMA is also. So that's going to be a key level to be keeping an eye on. Of course, we've got this 50 EMA also on the 8-hour chart. And if I go in the daily chart, well, those EMA levels are a lot deeper. And so, yeah, it's going to be interesting to see how the price action actually plays out. There are some key levels to be keeping an eye on, but of course, that's something I'm going to be tracking, and I'll be keeping you guys updated. And you can see that on the hourly chart, we were within oversold conditions, and now the bulls is now slowly starting to regain momentum, which of course is reflected on its price chart. And on the 4-hour chart, the bears are slowly losing that momentum also. And so it's possible that we are now on the brink of actually bottoming out, and then we see that reversal. And if we're going to 8-hour charts, you can see that the bears are now actually regaining control. And so, yeah, we could go either way, really. We could continue to set a deeper move to the downside where we actually breach past this level here, which then further confirm that we topped off. Or we could see a reversal at some point where we then see that final push, and then we'll see that bigger retracement. But like I mentioned, that's something I'm going to be tracking, and I'll keep you guys updated. And so, yeah, hopefully you found this useful. And if you did, then feel free to hit that like button. And if you're new, feel free to subscribe. Take it easy, people. Peace.